What's up, guys? Welcome back to Everyday Money. Are you guys having fun losing money out there this weekend? If you are, if you lost money, if you're losing money currently in the cryptocurrency markets, if you lost money this week in the stock market, the good news is that you are not alone. Pretty much everything across the board right now is in the negative. If I'm looking at my crypto.com app right here, the big ones that I follow Bitcoin, Shiba Inu Token, and Dogelon Mars. Because I like to invest in Bitcoin and I like to, it's kind of now become an investment in Shiba Inu Token, and then I'm throwing the dice again on Dogelon Mars to see how that goes. But Bitcoin is off almost 13%, Shiba Inu Token's down about 8%, and that has come up for the day. Dogelon Mars is off about 10.5%, and pretty much the rest of the market is in the red. Everything is red. There's two right now. Request and Pax Gold are up slightly, and really the funny thing is that Shiba Inu Token is on the top gainers list on Crypto.com right now by only being off 8.5%. So the thing is that if you guys are out there, you know, and you're down and you're losing money, and I see this in the subreddit saying, what's going on with SHIB? What's going on with Dogelon Mars? What's going on with Bitcoin? What's going on with the markets? Everyone is down right now because there's a lot of negative stuff that's going on in the financial markets. And when you look at cryptocurrencies, it used to be very decoupled from the stock market, you know, back in the day, back in 2010, 11, 12, 13. But now that there's more institutions that are into cryptocurrency, now that there's more retail buyers into cryptocurrency, and it's just basically become a mainstream thing. You know, you hear people talking about cryptocurrency that probably never would have in the past, myself included, and when things become more popular, the markets are going to start reacting more like markets that are more popular long term, like the stock market. So when I said last week that we're going to have a crazy week this past week, and we did. And we had, if anything, from the Omicron variant, and we'll see if that becomes an actual problem or if it's just going to be a media story. But nonetheless, it's going to affect investor sentiment, and it's going to probably push everything down. We also had back then the debt ceiling activity with an impossible government shutdown if we didn't get stuff done by the middle of December, and that has worked itself out. They kicked the can down the road, I think, to February, so we won't have to worry about that until after the holidays. So what is going on with the markets? What's going on this week coming up with the markets? Because I think that this next week coming up is going to also just be a wild ride. I think there's going to be a lot of green days, a lot of red days, and it's going to be crazy coming into the end of the year, and to see where all these markets end up at the end of the year. But what we have going on right now, there's a bunch of stuff, especially if you're looking at crypto markets. We got the holidays going on right now. And so people are spending their money on items, on presents, on travel, on things not related to sticking more money into the cryptocurrency markets. And so when, you know, a lot of retail investors are not putting a bunch of money into the cryptocurrency markets, it will bring down the price of individual projects, especially maybe projects that aren't as heavily invested into by institutions or the whales, so to speak. And I don't think that whales have as much influence in the market as a lot of people do. I think they're commonly scapegoated for when things aren't going your way, but nonetheless, the lesser projects won't have as much influence as those. But the upside of that is if you're investing in the stock market, holiday time is usually good for stocks. People are buying a lot of stuff, so that adds to the profit margins, adds to the bottom line, makes the stock market go up because earnings go up. Earnings are always good for stocks all the time. Now, we also have inflation that we're dealing with. And anytime that we have inflation, you are paying more for your basic goods, your fuel to get around, the fuel to heat your home, feeding yourself, etc. That's going to lead to less money to put in stocks, less money to put into cryptocurrency. Now, stocks do benefit from inflation a little bit, as it makes anything that you buy go up in price. But you know, if you guys have been out there and you're filling up your car, you know that gasoline is at least probably $1.50 where you are, more than it was last year. That's maybe even more. You guys out there on the left coast, you guys may be seeing more like $2.50 more, and then, you know, places in the south maybe seeing $1 more or whatever. But either way, the cost of getting around, getting to work every single day is definitely on the rise. This winter, heating bills are supposed to go up because of reduced amount of oil production, which reduces natural gas production, and the effects of inflation. If you guys are at the grocery store, you know groceries are costing more. For me, a pound of bacon has went up by about $1 to $1.50. Eggs have gone up by 50 cents. Milk has gone up by about 50 cents. Everything is getting more and more expensive. So inflation is going to have a negative pressure on crypto and stocks because people are not going to have extra money to invest in these different asset classes. And we're going to get to how inflation is also going to negatively affect stocks and crypto with monetary policy right after we talk about Omicron. Now, Omicron is the latest variant in the ongoing COVID-19 pandemic crisis, whatever you want to call it. You may think that it's a super bad thing, or you may think that it's media driven and not really a bad thing. But the fact of the matter is that there is a new variant out there. We don't know exactly how contagious it is. We don't know exactly how deadly it is. We don't know if the vaccines are going to be horribly effective against it. And there's just a lot of things we don't know. And the number one thing in the markets is certainty. And if there is uncertainty, it negatively affects the market. So we will see where this goes. We will see if this is actually a problem, or if the COVID-19 virus is starting to mutate in ways that make it more contagious but less deadly. And it's from what I've read, and I'm just an amateur virologist, is that as viruses go along, they become more contagious but less deadly over time. We'll see if that's the case with this one or any other variant that comes along in the future. But that will obviously have negative effects on the markets, especially stock markets, because if it's bad and we go into economic lockdowns, we go into travel restrictions, anything that is going to negatively affect the economic output of any country or company or whatever, it's going to have a negative effect on the stock market and likely on the crypto markets as well, because they are not as decoupled as they used to be. Now, the big news this week, and this is what really hammered stocks, is that the Fed came out and said that they are going to start doing some measures that are going to start fighting inflation, because inflation is at the highest rate that it's been in 30 years. We're looking at what looks like a 60s, 70s style inflation unless we get a handle on it. And if you guys remember, and if you don't remember, which, because I don't remember it, but I've read the history books, they had to raise interest rates up into the mid-teens in order to pull enough money out of circulation through the Fed in order to get inflation under control, because it was absolutely out of control. And if inflation drastically exceeds the rate of wages keeping up with inflation, you can really start getting into a bad way. Look at Venezuela, look at the Weimar Republic in Germany, and you can see where inflation could really be a problem. People having to roll around wheelbarrows of currency in order to buy a loaf of bread or whatever. So the Fed has said that they're going to start tapering back their bond buying program. They're buying $120 billion of treasuries and mortgage-backed securities a month in order to keep rates down, and they're going to say they're going to start tapering that back. They're also going to likely raise the federal funds rate and do that more often and probably sooner than what most people were expecting. And what this is going to do is it's going to raise the borrowing rates for everything, especially companies. Now, when companies have to pay more to borrow, they may not grow as fast, they may not have as large of profit margins, and so that will weigh on the stock price. A lot of this stock market run-up these last year, 2 years has been because of really low rates, and these companies can expand at the exponential paces. The same thing is going to trickle down into borrowing rates for the everyday buyer. So home mortgage interest rates will go up, car interest rates will go up, credit card interest rates will go up. Pretty much every interest rate will go up. So that could put some pressure on the housing market. It could level off prices. I do not think it's going to cause a housing market crash by any means, because of just the supply and demand side of things, and because interest rates are so low right now that even if they went up by 1% or 2%, they would still be at historic lows, going forward. So I'm not worried about a housing crash or anything like that, but just know that the interest rates going up will be negative for most markets, and just plan ahead for that. So here is what I'm going to be doing for this week and the coming weeks. When I see things in the red, that is a buying opportunity. And now this is where I say that what I tell you is not an indication to buy, sell, or hold a stock or crypto. I'm not a financial advisor. I'm not your financial advisor, so you need to do your own research, and this is just what I am doing. But when things are in the red, that is when I like to buy stuff. So this week, if things continue to be in the red, I will probably add to my positions in Bitcoin. Not like I'm going out and buying, $58,000 Bitcoins, but I'll make some fractional purchases of that. I'll probably add to my Dogelon Mars bank and just kind of dollar cost average into that and average down as time goes by. Shiba, I'm still just, you know, holding my coins. I think that there's a lot of upside for that with its, if they can launch the Siberian blockchain, if they can get the Shiba metaverse going, and with the pay-to-play NFT games, I think that there's upside potential to that. Now, if they come out with the metaverse, it may be that the sky is the limit on that, and if they can be first, and if they can be, good at that, we will see. But when things are in the red, I like to buy. I bought a bunch of real estate when it was hard, in the red back in the recession days, and that really has paid off for me big time. And this is another reason why you should have multiple investments. And I always recommend you guys being in a lot of different things. If you don't only be in crypto, don't YOLO your savings into Shiba Inu Token. Don't YOLO your savings into Dogecoin or Dogelon Mars or any one stock, Tesla stock or whatever. The way I do things, I have heavily invested in total market index funds. I am heavily invested in real estate, and I have a small amount of money into cryptocurrencies that I use as gambles, as bets, as essentially, let's see where these can go. And I'm getting more into Bitcoin and getting more money into that because I think that that is a very stable, awesome investment that I think will never decline in value, especially with the amount of institutional buying that's happening in that. So right now, while my stocks may be doing bad, even though they have done wonderful over time, and I'm very much up in my stock marketplace through VTSAX, even if my crypto is down, and again, I've done very well in that by just holding over time. I'm up probably 300 or 400% when you take into account the recent buys that I've made with new money in the amount that I gained on Shiba. Even while that is down, my real estate is doing fantastic. It's generating awesome returns in appreciation, in cash flow, and so when I just don't like to see people all into one asset class because anything can take out any single one of those. And if you have other ones, you can sit there and watch your cryptos go down and just be like, whatever, I'll buy more, I'll average down. Stock market, whatever, I'll buy more, I'll average down. And if something happens to real estate and it goes down, as long as I can still cover my mortgage on that, which should be pretty easy, I can buy more of those and average down as it goes down. So that's what I think is going to go on for the market this week. That's what I'm doing. You guys do your own research. Put in the time to figure out what it is that you want to do if the market does go down or if it goes up. Don't discount taking some profit. Don't listen to the hold to the moon people that are on the internet, that are on Reddit, that are on Twitter. That is a way for you to end up watching it go up and then come crash back down and lose out on all your gains. So guys, if you guys like this, give me a big thumbs up. If you guys don't have a brokerage yet, WeBull out there, if you use the link below, deposit $100 into your WeBull account, you can get stocks worth up to $2,300. That's instantaneous return on your investment for you doing practically nothing. Again, hit me up with the thumbs up button down there for the YouTube algorithm. If you haven't subscribed yet, hit the subscribe button, hit the notification bell so you don't miss anything that I put out in the markets, real estate, stocks, crypto, personal finance, just everything for us to make money so that you don't have to trade every bit of your life for money. I appreciate you guys watching today, and I'll see you in the next one.